Hey everyone, happy Thursday, October 23rd. It's about 9 a.m. on the West Coast, and it's time for another market update. Well, we have reached day 23 of the government shutdown. It is now the second longest in recorded history. The first longest is in December of 2018. So we're at day 23 now. Something we talked about last week, the politicians haven't made any headway. There doesn't seem to be any, deal on the verge of happening. But something that might put pressure on those politicians has to do with air travel. And right now we have about 13,000 air traffic controllers and 50,000 TSA agents that aren't being paid for this month. So, I know a lot of people would scoff at this, but, that might create situations where there's going to be a lot of canceled flights and people basically not showing up for work. And I know people, well, they have a job, they need to show up even if they're not getting paid. But these people have rent due, these people have food to put on the table, feed their children. And if they're not getting paid at all, they can't go to a job and not pay their rent. So a lot of these people might be driving for Uber or going to DoorDash, calling in sick to go drive for DoorDash so they can have enough money to pay their rent. So again, this is not a good thing. We want these people to get paid. And again, in this country, air travel is very important to our economy. And besides our economy, just people in general are going to be very upset if flights getting canceled, they can't go on their vacations and so forth. I know I personally have a flight at the beginning of November. I'm starting to worry. Will it get delayed or canceled because of this? So again, something like this might be what takes to get them to the table, to get them to negotiate, to get them some sort of deal, to get the government reopened again, and so that way, air traffic is not, shut down. So we will see what happens, but again, no deal is on the verge that I am aware of. But again, these days that can change any second. Next thing, so we got existing home sales for September, and they did tick up with as low as rates started to come down. And again, these are existing home sales; these are homes that went basically closed in the month of September. So a lot of these people might have been shopping, maybe in July and August, where end of August is when rates really started coming down from the higher sixes. And as you can see, they're up 1.5% month over month. It was at about 4.06 million homes closed compared to 4 million last month, compared to about 3.9 last September. So up about 4.1% year over year. Median home price is about 415,000 across the country. And again, still up year over year at 2.1%, although it did come down month over month. And, other things on here, it's about 4.6 months supply, which we consider about a balanced market. And again, this is going to depend on your area. Some areas are going to have more supply, more inventory out there than others. And days on market ticked up from 31 to 33 days. Sold above list price was at 21%, and first time buyers was at 30%. This was good to see just because it's data. This is from NAR, this is National Association of Realtors, not the government. So we actually got these numbers. And again, generally things are going to be, from it to tick up from August to September, generally things are slowing down. Kids are back in school, people are less likely to relocate their families and things like that. So, again, and like I said, this is people, since they close in September, they probably started shopping in July and August. And, remember, rates really didn't start coming down until the end of August. So, when we get the October numbers, we should see probably even a bigger increase, because that would have been even more folks that maybe came out of the woodwork because, rates had come down. So again, good to see just because it was data, and good to see because it ticked up. Next thing we got. So rental market. So Zillow came out with a rental market analysis from the months of September, and they're showing rent affordability at its lowest level in about 40 years. And again, if you go back, it looks like it came up so much in the pandemic. We're still at a pretty high level compared to, 5 years ago or whatever it may be, in 4 years ago. But it's down to 28.4%. And what that is the amount of people's income they're spending on rent. And, historically, we always say, you want to be about under a third of that, a third of your income, under 30%. Mortgages, we can go a little bit higher than that. But, again, good to see that rents are coming down. And the other thing that came out of the report is that landlords on Zillow are about 30% of listings, rental listings, are offering concessions. So in rental market, concessions are, a free month of rent, move-in specials, free parking, free whatever it may be. And I used to be in the apartment management industry, and we did that when we needed tenants, when we weren't getting our units filled. We would have to lower prices, run specials, things like that. So that shows that, rent is getting more affordable, again, depending on your area, but across the country in general for people, which is, it's really good. It's good for inflation numbers, and it's really good for just people in general. So good to see that rent's coming down. Not good for landlords, I guess, but again, rent has been so high, it's been so hard for people to afford things. It's overall, to me, it's a very good thing. Initial jobless claims, we still haven't got these. This is again one of these government reports. I think we're 4 weeks behind now on these jobless claims. So we're gonna, when the government opens back up, we're gonna get a bunch of these claims and see what's been going on, along with all the different inflation reports and the big jobs reports and things like that. But anecdotally, Meta I saw was laying some more people off on their AI department. So anything outside the government we're seeing, it seems like job growth is definitely slowing down. Maybe so we probably will see more unemployment claims when the government finally opens back up. But when that will be, we shall see. So where does that bring us? So last week, the average conventional, according to this lender survey for good borrowers, was about 6.28%. Today, yesterday was at about 6.17. Today, they haven't updated it. So let's say today it's been a little bit of a negative day, a little bit of a slide back in rates. So I would say about somewhere in the 6.17 to 6.2 range, which really is at the one close to the lowest levels we've been in over 3 years. So that might be an indictment on how high rates have been. That 6.17 is getting really low. But if you remember correctly, before the Fed cut their rate, we were down to 6.13 and jumped back up. Last October, before a big jobs report came out and blew us out of the water, we had, I think, dropped down to about 6.07, 6.09, somewhere in that range. So we haven't got under 6 in over 3 years. It'd be amazing if it did. Anything with a 5 in front of it would probably cause a big uptick in demand, a big uptick in activity. But keep in mind, again, if you're looking to buy now and you can afford where rates are now, any uptick in activity is also going to bring up prices. So, it's really hard to time the market perfectly. So just keep that in mind. But good to see rates continue to come down. And this absence of data. And for us to come down even further, we're going to have to get this data. We're going to have to get the jobs report. We're going to have to see GDP. We're going to have to see inflation. We're going to have to hear from the Fed. All those kind of things are going to have to happen. And some of those will not happen until, again, the government shutdown is over with. What's the next thing on our list? Let's see. We got important dates. So tomorrow we are getting a delayed version of CPI inflation. The reason they're bringing employees back in to do this is because they have to calculate the cost of living adjustment for Social Security. So that's good that they're going to do that. Also, it's good that the Fed will get some sort of look at inflation before their meeting coming up here at the end of October, October 29th. So that will be next Wednesday. We get the next Fed cut announcement. Right now, it's at about 98.9%. So 99% chance they're going to cut, 1% chance they do nothing. So again, the markets are pretty locked in that they're cutting. That's why, one of the reasons why rates have continued to, slowly trickle down. But like I said, if we want it to really come down, the Fed's going to have to keep cutting, and we're going to have to see that data continue to support them cutting. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, I hope you guys have a great week, and I'll talk to you guys soon. Thanks a lot, guys.